when we see the number of investors increasing in the market, they are not coming for the right reasons. And when they don't come for the right reasons, that is exactly why SEBI had to come up with report saying 91% of F&O traders lose money and more than 2/3 of the day traders lose money. Yesterday's news says the SEBI chairperson has, in an interview said, roughly Indians are losing 60,000 crores a year in this day trading and F&O kind of activities. So we have a job to do. We have miles to go before we can rest.
First things first, why is very, very important. Why am I doing what I am doing? Okay. If your purpose is not clear, if your intent is not clear, if your why is not clear, you'll keep fumbling कि भाई करूं नहीं करूं, करना है तो क्या करूं, कहां पे जाऊं, कैसे करूं वगैरह. Okay. So if your why is clear and it is really very solid, then you will be motivated enough to put your efforts for doing investor awareness program. So some few things, it can be different for different people, but some of the reasons why we might end up doing investor awareness program, each one of us, is this. Okay. One is to educate the masses and serve the classes. By this, what I mean is, we are all able to serve only around 100 to 200 people. That is the truth of our practice. If you are really doing deep practice, relationship-based practice, that is what is we can do. Maybe if we have team members, we can, once again, each of the team member can serve only those many people. Deep relationships based practice. So this is a good way to educate the markets and masses and help the masses how to get opportunity. This is a big challenge. Okay. Many of you get stuck by the baat to kar lunga. Network FP will give me the PPT decks. Gajendra will teach me how to deliver these sessions. But kaun mujhe stage kaun dega? Okay. So here are some tips. Okay, quick tips. One, when you want to get started with this, the best way to get started is to create your own demo session. Okay, when you do a demo session, let's say you're getting 4 PPTs today. Create a demo video of that. Okay, and the best way to tell people, look, I'll do this session, instead of telling people that, look, I can do this session, share with them what I can deliver for you. Okay. So friends, Gajendra will be delivering the session as if he is talking to the investors. Okay. So be mindful, and also you also interact with Gajendra as an investor.
So why most of us are not able to create wealth, guys, right? The reason is these. When I meet thousands of retail investors, what I find is that for them, knowledge about investment options is very vague. They knows about stuff, but they don't know it really well. And as a result, we rely on our agents, family CA, relatives, and friends. We try to borrow knowledge from here and there. Wealth can never be created on borrowed knowledge. You have to invest your time and efforts if you want to create sustainable wealth. In our country, we do not seek advice from professional investment advisor. We think Google hai, ChatGPT hai, sab kuch hame mil jata hai. And that is why, we go wrong. In the Western world, people go to experts, people go to specialists for any simple advice as well. People are not clear about risk and returns. If I ask someone, everybody says my 100 rupees should become 200 rupees, right? But nobody wants to see 100 rupees becoming 99. So people are not really aware about what risk and returns, each products carry. And because they are not aware about returns, they look for comfort in something called FDs, government savings, because they offer guaranteed stuff. The guarantee also comes with a cost, which many people don't know, right? Nowadays, in the last 4 years, we've seen people moving into the equity bandwagon. And the challenge with people not making equities because the expectations from equity is very unrealistic. And in the last 4 years, in the times that we are living, now 18-20% also seems very boring return, because people want to make 100% return, 50% return in 6 months, 1 year. The major challenge which I find, particularly with more intelligent people, more intelligent crowd, is the overconfidence. Mujhe sab kuch aata hai, though they might be know a little stuff. And as you all know, a little learning is a dangerous thing. But we think we know all, and that is why we make big mistakes in life. One of the main challenges which I found with many other clients, people, is that they have no time. वो 7 के 7 दिन काम करते हैं, बट उनके पास टाइम नहीं है अपना जो पैसा कमाया है उसको कैसे मैनेज करें, राइट? सो नो टाइम, दे कीप प्रोक्रेस्टिनेटिंग, आज नहीं कल करते हैं, करते करते साल 2 साल 5 साल निकल जाते हैं. एंड लास्ट बट नॉट द लिस्ट, फोबिया ऑफ हैंडलिंग फाइनेंशियल मैटर्स. Many couples, many women particularly, they might be earning money, but they have a phobia ki I don't know where to invest. And because they don't know where to invest, the money is simply parked in FDs or bank accounts. So as a result, we are a nation of savers, guys, but not investors. Now, how do you make big kind of wealth? So there is this wonderful quadrant from Rich Dad Poor Dad. This is there are 4 kind of people. You are an employee, you have a job, okay, which means you are trading your time with money. आप 8 घंटे काम किए, आपको 8 घंटे का सैलरी मिलता है, उससे वेल्थ नहीं बनती है. ओके, 95% of the people fall into the first category. However, they end up creating only 5% of the wealth. The better version of employee being a self-employed. आप दूसरे के लिए काम नहीं कर रहे हो, आप खुद के लिए कर रहे हो. Like a doctor, CA, आप 8 घंटा 10 घंटा काम कर रहे हो, आप अपने पर आर्ली कुछ भी चार्ज कर सकते हो. And you are still better, okay? You are still better than being an employee because you call a shot कि मुझे कितना मिलना चाहिए. The third category that you move is a business owner. Like, so I own a system. I have a team of 30-40 people. I leverage their time, okay? मेरे पास system. And finally, you also become another route to create wealth is investor. You don't run those businesses because those businesses comes with a lot of heartburn, stress, efforts, and you invest in other great companies. Okay. And Warren Buffett is a prime example. You own investments, but without the pain of running the day-to-day show, right? And that creates the maximum wealth for you. So you have to understand this quadrant. Where are you right now and where you should eventually move?
So friends, next we have Puneet Oberoi, another star, amazingly good investor awareness IAP speaker, trainer, and within IAPs, I know that he does a lot of IAPs, but within IAPs, he is really strong on insurance. Okay.
Very important topic. There are 2 major risks in life: the risk of dying early and the risk of living too long. So this is what we need to cover today: is risk of these things have to cover because our families depend on this. So I'll share about term insurance. Who does not understand is that term insurance is the purest form of life insurance. When we talk about, it is securing my family in case of something happens to me. And the purpose is that this is not attached with any lucrative monetary benefit in the future. It's just that it covers you in case of death only. In case of death for any reasons, not just accident, any reason. So term insurance is purest form. When you combine anything like let's say mutual fund is attached to it, or you can say ULIP is attached to it, they become a product with profit with profit policies. Means you get some money back at certain age, which we are being doing in years, which were like money back policies or endowment plans. Those were the plans which gave some money back at the end of certain period. But term insurance covers only and only pure insurances. So we need to cover that, and I need to make you understand on one topic which is very important. We all understand term insurance, but what we need to understand is what is the right age till which we should cover ourselves. To summarize, I'll just give you pointers, which is very, very important to note down. Health insurance, buy higher cover for future today. Don't look for future. Life insurance, buy term insurance for, buy higher cover for future, and life insurance, buy term insurance for today, not for tomorrow. Critical illness, it's to protect your income loss and other incidental expenses. Personal accident, loss of income due to accident and disability. Home insurance, most important asset, don't ignore. And motor insurance I have not covered, but watch for depreciation clauses before buying those. I'll just end with one quick share about what need to be done. So every presentation we do, we have to mold according to the audience. Today was molded according to what you needed. So it was easier for me because I'm doing those these sessions. So it was easier for me to mold, but the preparation went in the evening also, in the morning also. I did it for almost 3 times. I rehearsed about it. I noted down. If you look at these pointers I've been pointing out, there's a iPad with the complete the structure going around with me. These are important because if I have done more than 700 plus IAPs, but still you need to practice. You cannot just go on the audience and think that it can go very well. I'm savvy about it. So you have to prep every time you need to go out in flow.
A very, very warm welcome, Amit sir, for taking
Thanks,
up the
Priya.
next session. And we have, we did an entire mutual fund categorization series. We spoke about so many mutual funds, but how do you make this simple when you have to present it towards your client? Okay.
When Priya called me for this particular session, she said we did 12 sessions with the help of 12 different fund managers, and each of them got 1 hour each. So there we spent 12 hours talking about mutual fund categories, and you got 40. So I was excited. 12 fund managers got 12 hours and I'm getting 40. Then she said minutes. So I said, wonderful. So 12 guys did something in 12 hours and I'm supposed to talk to you in 40 minutes because those sessions were for professionals, whereas this particular session is for lay investors. And from that point of view, there is a huge difference between what we all learned from those fund managers versus what we are going to tell the people at large. Now, okay, I'm just now stepping out of the IAP mode and talking to the professionals right now. We keep attending a lot of meetings. We talk to fund managers. We hear some commentaries. We read a lot of stuff. We watch videos. And then the crux of that has to be presented to the investors. And that is really the attempt of this particular IAP, that whatever we've learned during those sessions, then you can actually go through the recording also, because all the sessions were recorded. Wonderful insights that we all got from those sessions. I'm sure many of you have taken the quiz also. But whatever we learned, how do you make it relevant for the common person without getting into the technical details, without getting into the jargons? The way the mutual funds work is a fund manager or the asset management company, they launch a scheme, and this scheme would have certain stated objectives. The investors whose requirements are aligned to those stated objectives, the scheme is appropriate for them. So they invest money in that scheme. Whatever money is collected in the scheme, the fund manager then invests in various securities. These securities generate some return in some form, be it capital gains, be it interest, dividend, whatever way, or even REITs will have rental income. The returns which are generated out of those investments are passed back to the investors after deduction of certain investment management and related expenses. And to that extent, the fund manager only earns fees for managing the portfolio, does not take any share of the profits or earnings. Whatever the portfolio earns is passed back to the investor. At all these names, no, a common investor is likely to feel that while mutual fund sahi hai, lekin mere liye nahi hai. You already listed down some 40-45 names of different categories. Now within each category, there will be 30-40 different schemes. What am I supposed to do? How am I supposed to understand and identify where to invest? And that's a huge challenge. But that's a wrong approach. It's an incorrect approach. The correct approach comes in a correct question. And that correct question is, mutual fund sahi hai, lekin mere liye kaun sa sahi hai? And that mere liye kaun sa sahi hai is actually the only question that one must focus on. Let's take an example of the clothing that we wear. And Gajendra mentioned in his talk that when you do when somebody does an IAP, dress formally. So when you are speaking on a platform as an expert, it is better to dress formally. But that same formal dress, which makes you look very presentable, elegant, is an inappropriate dress when you go on a vacation with your friends. The same dress becomes inappropriate to wear when you go to sleep at night. Suitability can be dependent on the situation that you are in, plus your objective also. Exactly in the same way, there are multiple types of mutual fund schemes, different categories. One scheme may be suitable for a person in a situation. The moment the person changes, that scheme may not be suitable. The moment the situation changes, that scheme may not be suitable. And from that point of view, constantly, and constantly doesn't mean every moment, but roughly once in a year, when you do the review of your portfolio, this question becomes a fundamental question to ask. Nilesh has a point. Presently, usually investors don't have why. They are coming by seeing others making returns, especially after COVID. They don't want, they don't seek answers of मेरे लिए कौन सा सही है. They always want fund जो best returns दे. Yes, Nilesh, you captured the investor sentiment beautifully well. That is exactly why we all need to work harder to educate the investors. I'm just I go by that old story that a shoes company sent a salesman to a village. He came back saying no market, nobody wears shoes, and the next salesman went and came back and said nobody wears shoes, huge opportunity for us. Right, so I'm looking at this as a huge opportunity. And you are absolutely right. Even when we see the number of investors increasing in the market, they are not coming for the right reasons. And when they don't come for the right reasons, that is exactly why SEBI had to come up with reports saying 91% of F&O traders lose money, and more than 2/3 of the day traders lose money. Yesterday's news says the SEBI chair person has, in an interview, said roughly Indians are losing 60,000 crores a year in this day trading and F&O kind of activities. So we have a job to do. We have miles to go before we can rest.